All right. Well, what is up, tycoons? What's up, traders? Super excited for today's video. Going to come at you guys with another natural gas update. We're going to take a look at the futures. We're going to take a look at UNG, Boyle. We're going to take a look at the spot price of natural gas as well. Make sure to smash that like button and subscribe to the channel if you guys are new. I'm doing natural gas videos pretty much every single week. So if you're looking for a place and a channel to get constant updates on the prices of natural gas, UNG, and Boyle, this is definitely the channel for you. I know I haven't been uploading as much lately. I've been moving, and I just got out of the hospital yesterday. I have got diagnosed with Bell's palsy. So it's a little weird. Like half my face is paralyzed, but it's not really stopping me from doing anything. So anyways, we're going to jump straight into the video and get right to it. We're starting off with the natural gas futures here on the monthly time frame. And if we zoom in a little bit, we were looking at this hammer candle that we had. Okay, this was a nice sign that we could have had a bullish March. And we started the month off good, right? We started heading upwards and, really trying to get above the top of this hammer candle. And if we can close above the top of this hammer candle for March, then this is going to be a bullish sign that we could be getting a reversal. But things have, spun to the downside ever since then. All right. And we're actually heading much lower back to our demand zone down below. Now, we bounced very, very hard in that demand zone, and that's initially what caused this hammer candle. March is still not over yet, so there is a possibility this could close green. But as of now, the likelihood of that seems pretty slim. And so the bearish trend may continue in natural gas. All right. Now, if we actually zoom down to the 4-hour chart, I've been trying to warn people about this, but we've had essentially this rising wedge right here. Okay. And I said, hey, there's a good chance that we're going to come down and fill this gap once we break our line in the sand, which was right over here at 209.3. So a lot of people are asking, what happened with natural gas? What's going on with Boyle? What's going on with UNG? Well, we had this gap right here in between these two candles. We had this rising wedge, and we got a clean break and retest. All right. And, we got a bearish chart pattern in our overhead supply zone. And if we also zoom in here on our MACD, we also ended up getting a sell signal. So, I wasn't really interested in trying to go long natural gas up at these prices, and I've really just been waiting for prices to head lower to possibly grab some more UNG shares. Now, I haven't done that yet. I'm still waiting to see how things are going to play out. But the way a rising wedge works is in a perfect world scenario, you're going to get the break and retest like we did, and it's going to take you back down to where the pattern originated. So we could see natural gas futures head all the way back down to 170, but that doesn't mean that that's a bottom, right? We have that demand zone down below. All right, that's really about 165 all the way back down to about 110. Now, remember, it's a monthly demand zone. That's why it's so big and looks so big on the 4-hour chart. Okay. But yeah, so we broke through that line in the sand here of 209.3. We filled that gap down. So now what we're going to do is we're going to see, do we gravitate back towards this demand zone where, buyers have been present? And is this possibly going to be an area of liquidity that natural gas longs are going to be looking to grab at, right? And so, the way liquidity works, price may drive down just so that the liquidity can be grabbed in this demand zone to potentially push it up higher. Now, we're actually going to look at the spot price of natural gas real quick. Now, remember, none of this video is financial advice. Rather, I'm just trying to keep you guys updated on the levels, the things that I'm watching when it comes to natural gas and what I'm looking for. Now, the spot price, let's zoom out a lot real quick, okay? And let's actually go to the weekly chart. I want to show you guys something, and what really even brought natural gas to my attention in the first place, okay, is look at the prices that we hit here recently, right? We just hit these lows, okay? Look at the chart for it at this time. Let me actually put a nice little rectangle here for you guys, okay? We have not stayed at these prices for a very long time historically in the past, right? Over here, we did have a little bit of time period where we stayed at these prices for a while, and then prices quickly recovered and shot up tremendously high. Over here, we dipped down into it, and then prices shoot up, and then prices shoot up. Same thing happened over here in 2009. Prices shoot up. Over here, 2012, 2013, prices shoot up. 2016, 2017, prices shoot back up. And then we have 2020 over here. Prices did remain pretty low for a while, but eventually they ended up recovering. So, that's kind of the whole reason that I really started a position in natural gas myself, is that, hey, it may take a while. It might not happen overnight, but these are historically pretty cheap prices in natural gas. And if you think that natural gas is still going to be relevant and prevalent in the future, there is a chance that these could be some good buying opportunities, but you need to have the right risk management, okay? Especially with trading things like BOIL and leveraged ETF. They don't call this stuff the widowmaker for no reason, right? So just keep that in mind. You have to manage your risk. Just because I'm looking at something doesn't mean necessarily that you should too, or that you need to as well. Now, we're going to go back to the daily chart here and go over some of the different signals and strategies that I use to really help trade and spot possible entries and exits when it comes to natural gas and the spot price in particular. So what we're looking at here is our MACD as well as our RSI, our relative strength index. And you can spot divergences on here as well as entry and exit signals. I'll go ahead and go over those for you guys really quickly, but they've played out very well historically over the past year or so, right? So in this case, we're making higher highs on the price of natural gas, but on the relative strength index, we were actually making lower highs, right? If I zoom down on the RSI a little bit real quick, you guys can see that we have a high at this point where we have a high, and then we create a higher high, but we create a lower high. So when the RSI is making lower highs while the price is making higher highs, all right, this is actually going to be a bearish divergence. And then here we end up getting the red line crossing below the blue line on our MACD. That would be an exit signal. So we got, bearish divergence combined with an exit signal. And you can see we had a sharp move to the downside. Now, right after that, we put in a low and then a lower low. But on our relative strength index, we put in a low and then a higher low right here. So we're actually building relative strength, creating higher lows while price is going down, making lower lows. That's a bullish divergence. Right here, we get a MACD crossover, and you see we get a nice move to the upside. And this has played out and been effective combining these two strategies and signals for a pretty long time, right? And I won't dive too much into it, but, we have higher highs, lower highs here, bearish divergence, sell signal, boom, we get a drop in the price. Bullish divergence right here, MACD crossover, get an upside move, right? So if we come to what's relevant right now, we had this initial bearish divergence combined with a MACD sell signal that really helped fuel and spark this move to the downside, okay? And currently we have some bullish divergence that we've started bouncing off of when it comes to the spot price of natural gas. We have a low here, right? And then we had lower lows over here, but on our RSI, we had low, we have higher lows at these 2 points. So we're building relative strength, okay, while the price is falling, going down. And we also got a crossover right here on our MACD. And you can see we've actually started moving up since then, since that time period. Now, this was our initial bearish divergence, remember? And I said that you wanted to look for a break, retest, and then continue push up higher. If we zoom in, that's currently what we're getting right now on our relative strength index. So that's a good sign, right? Now, it's not necessarily being reflected in the futures in BOIL and UNG. They trade based off of the futures contracts, right? So, spot natural gas is performing decent and it's following the technicals pretty well. We're just not necessarily seeing the follow through when it comes to UNG and BOIL. Now, when it comes to major overhead resistance for the spot price of natural gas, 279 is an area that I'm paying attention to, as well as 332, really that $3.30 region is going to be my next major overhead resistance level. Those are going to be some of the key areas that I'm watching right now. If we head on over to BOIL, we'll go ahead and take a look at BOIL first. Okay, and so BOIL, all right, has been making all-time lows. All right, now I've mentioned this before. And actually just now in my most recent video, that things that are creating all-time lows or 52-week lows, they tend to make new lows. And look at what we did today. We actually just made new lows. We broke through our 435 level right here. And now we have a new low and it's acting as resistance. So with that being said, the major support level that I'm paying attention to next is going to be 3.2. All right, $3.20 on Boyle. That's where I think we do have the potential to come back down and head down towards. Now, very similar to the spot price and some of the other things we were looking at, right? We had bullish divergence, and we have that currently right now. Okay, if you take a look, we're creating low, right? Lower lows. We have low, higher low, higher low. So we are building relative strength on the daily chart, even though price is going lower. We just necessarily haven't really seen much follow through. We did get a very nice bounce initially off the initial bullish divergence where we had the low and the lower low, right? And then we had the low and the higher low. And we saw a very nice push up there, but that 795 level that I gave you guys was a major resistance, and we ended up heading back down lower. So we were looking at a few potential scenarios here. We wanted to see, was this stuff going to put in an inverse head and shoulders, right? That's one of the first things we were looking at as a possible scenario, where we had a left shoulder right here, we had a head, and we're starting to form a right shoulder. All right, we invalidated that. We were looking to see if potentially we could get a double bottom here at the 435 region, and that did not play through as well, right? So things have been looking pretty bearish when it comes to Boyle, and it's been on a pretty big downtrend. Now, if we zoom in here on our MACD, we still have some question marks here because we haven't fully gotten an exit signal. But I warned that, hey, the MACD is getting very, very close right here. We could be due for a big move. And that's typically what you see when the MACD lines are squeezing together and very tight, is you're either going to get a big move to the upside or a big move to the downside. And currently they're both pretty much at the same level. So if this thing curls down below, we could be due for a big drop in Boyle, heading down to that $3.20 region, potentially even breaking that as a support level. But if this thing curls back up, there is the chance that we start to rally again, right? Notice we do have a gap up to fill right here on Boyle in this range from these candles all the way up to about the $7 region, just below $7. So it'll be interesting to see what happens. I would definitely pay close attention to the MACD here on Boyle, especially on the daily time frame. We'll head on over to UNG now, and UNG of course, is going to be looking very similar. I want to go over how I've been tracking UNG pretty much the whole time and why I have these fib targets on here. I'll go ahead and explain that real quick for you guys. So if you're not familiar with the fibs, the way the fibs work, all right, is nothing moves in a straight line down and nothing moves in a straight line up. Rather, you get a move down, retracement, continuation of the trend, or a move up, retracement, continuation of the trend. That's how you're going to spot trend continuation, okay? So we can see here that we had a move down, we retraced up to our 61.8, and then we continued that trend, right? And then we retraced up again to the 50%, and we continued that trend, each time putting in lower lows, right? Then we retraced up again to the 61.8 and put in a new low, continue that trend. Now, the reason that I look at the 61.8, the 50%, and the 38.2 is these are the three most common and well-respected retracement levels. Okay, there are other retracement levels, but especially if you're a beginner new to using the fibs, these are going to be some of the most important and well respected that you can pay attention to and really start learning how to use. Now, you can also use these to spot reversals. Okay, so if you move down, retrace, consolidate, and break through those retracement levels, then that's how you could spot potentially an upside reversal. All right. Now, if we come in here, as I mentioned, we were tracking this inverse head and shoulders. Okay. We're going to go ahead and take this out of here now because we invalidated that. And UNG right now is potentially putting in the double bottom. Remember, I mentioned 715 was going to be that area to see that we were going to be looking for. Okay. Boyle is leveraged. It's going to suffer from higher decay and things like that. So, that's why you're not seeing necessarily the double bottom in Boyle. But it is potentially trying to happen here in UNG as we're holding the line in the sand very well here around 715. And there is a chance we could continue to head upwards. Now, we need to be cautious because on UNG, we actually did get the MACD crossover to the downside. Okay, remember on Boyle, it was tight and they're basically at the same level. Here, the red line has crossed down below the blue line. And so there is a chance that this could be a dead cat bounce to ultimately break that support. Or, we could get the double bottom to play out and see this thing curl back above. So pay close attention to that. 752 is a major resistance level. That's where I started adding that was my ABC wave target. All right. And so if we go over that, we can see here that I have this nice ABC structure, and the markets tend to move in 3 and 5 wave, moves basically, right? 3 to 5 wave patterns. So, your C wave right here is going to be the 1.0 extension of your A to B. All right. And so we got our A wave down, our B wave retracement. All right. And then we got our C wave down. And, we're really just kind of consolidating right around the C wave. We haven't started heading lower. I do have some bearish price targets, aka support levels, to pay attention to, where possibly I'm going to be looking at adding some more UNG shares, just depending on how things look. All right, so if we break below 715, 667, 641, and 605 are going to be my next 3 key areas and bearish price targets that I'm going to be looking for and paying attention to when it comes to UNG. And 822, 904, 1031, and 1167 are the major overhead resistance levels. Now, remember, I mentioned the fibs, and we really haven't gotten any type of retracement except this little bounce right here that we got. Now, even if we were to go here and slap on the 23.6 extension, right? And so we do this, we can see that we still didn't even hit the 23.6 extension, which is basically the minimum type of retracement that you would look for when you're looking for a retracement. So we've pretty much just had this huge move down. Okay, ever since rejecting our 61.8 level up here, we've had this huge move down. We bounced a little bit, but we didn't even get a 23.6% retracement. Rather, we're just consolidating here. So there's 3 stages to a reversal. There's your downtrend, then you have your box consolidation, and then you have the reversal itself. So it is very possible, one scenario, if we don't continue heading lower, that this was our downtrend, right? And now we're in the box consolidation phase in through here, right? And then we could be looking to potentially get that reversal back up to the upside. Now, there's a lot of work to be done. And if that happens and we break through some of our major resistance levels that I gave you guys earlier over here, the 38.2% retracement is going to be 1271. The 50% retracement is going to be 1443. And the 61.8% retracement is going to be 1616. So if we were to take a look at where the price is now, okay, a 38.2% retracement is going to be about a 70% roughly return. A 50% retracement is going to put you at about 95%, and a 61.8% retracement would put you at about 120% on profit on your shares on UNG, which for me is the reason that I'm getting into these plays. Okay. There's tons of work to be done, and there's a possibility that we continue heading lower. But from a risk to reward standpoint, I don't mind risking, having like a nice 2-to-1 or 3-to-1 risk to reward ratio, which is currently what I have on UNG, on my UNG shares, right? Where I'm risking, basically a few dollars, right? Because I got in the 7s. I'm willing to hold this stuff, for a while, for months or years, just depends. We went over that initial natural gas spot price, and the prices, they're low. They're touching historic lows. They can go much lower, but we saw in that chart that whether it takes a few months or whether it takes a year or two, the price of natural gas has recovered and went back up once we touch these historic lows. Now that pattern doesn't have to repeat itself, but I'm fine with adding some positions here, and risking some money. That's fine. It's not a huge position. It's not the only thing I trade, but it is something that I'm in right now, and just kind of to give you guys some nice updates on it, let you know what I'm watching, what my thoughts are as we go through the week, pretty much every week when it comes to natural gas, and BOIL and UNG. So smash that like button, subscribe to the channel if you guys are new, and I'm out.